Guys, we need to talk about Cardano right now. While you were sleeping, crypto whales just dumped nearly $400 million worth of ADA, and the charts are painting a picture that could send shivers down every hodler's spine. I'm seeing technical signals that haven't appeared since the last major crypto winter, and if you're holding ADA, what I'm about to show you could save you from a world of financial pain. But first, smash that subscribe button because this analysis could literally change your portfolio's future. What's up, crypto fam? Welcome back to the channel where we dive deep into the markets that matter most to your money. Today we're dissecting a developing situation with Cardano that has me genuinely concerned for ADA investors. Here's what's happening. Cardano is down nearly 2% as I'm recording this, but that's just the tip of the iceberg. We're looking at the third consecutive week of declining prices, and the technical analysis is showing patterns that experienced traders recognize as major warning signals. But here's where it gets interesting, and potentially scary. While retail investors are still buying the dip, the smart money, the crypto whales with millions on the line, are heading for the exits. And when whales move, the entire ocean follows. I've been tracking on-chain data, transaction volumes, wallet distributions, and technical indicators, and what I'm seeing suggests we might be at a critical inflection point for ADA. This isn't just another temporary pullback. This could be the beginning of something much more significant. So buckle up, because by the end of this video, you'll have all the data you need to make an informed decision about your Cardano position. Let's start with the numbers that are keeping me up at night. On July 25th, Cardano experienced what can only be described as a massive profit-taking event. According to sentiment data, investors booked profits worth 143.63 million ADA in a single day. That's not just profit-taking, that's a stampede for the exits. But here's the kicker. Since that massive sell-off, Cardano's transaction volume has collapsed. We're talking about a drop from $1.69 billion on July 25th to just $744 million yesterday. That's a 56% decline in network activity in less than 2 weeks. Now some of you might be thinking, but wait, doesn't lower volume sometimes indicate accumulation? And normally you'd be right. But when you combine this volume drop with the other signals I'm seeing, it paints a very different picture. This is where things get really interesting. And by interesting, I mean potentially catastrophic for ADA prices. I've been analyzing the whale wallet data, and what I'm seeing is unprecedented selling pressure from the smart money. Investors holding between 1 million and 100 million ADA, these are the serious players, the institutional money, the people who move markets, have dumped 390 million ADA since July 24th. Their holdings dropped from 18.9 billion to 18.51 billion ADA. Think about that for a second. These aren't retail panic sellers. These are sophisticated investors with teams of analysts, people who have access to information and market intelligence that most of us can only dream of. When they're selling in these quantities, they're seeing something that has them genuinely concerned. Now, here's the plot twist that makes this even more complex. While the mid-tier whales are selling, the mega whales, those holding over 100 million ADA, actually increased their holdings by 450 million ADA. At first glance, this might seem bullish, right? Wrong. And here's why this actually makes the situation more dangerous, not less. While the on-chain data is painting a concerning picture, the technical analysis is downright terrifying. Cardano is trapped in what we call a falling channel pattern on the 4-hour chart, and it just got rejected from the overhead resistance trend line for the second time. But here's the signal that has my full attention. The 50-period EMA is rapidly approaching the 200-period EMA from above. For those who don't know, when the short-term moving average crosses below the long-term moving average, it's called a death cross, and it's one of the most reliable bearish signals in technical analysis. The RSI is sitting at 40, indicating declining buying pressure with plenty of room to fall before we even reach oversold conditions. The MACD has already crossed below its signal line, confirming the bearish momentum shift. If this falling channel pattern plays out, we're looking at a potential target of $0.6884. That's another 8 to 10% drop from current levels. But given the volume profile and whale behavior I'm seeing, I wouldn't be surprised if we break below that support level entirely. Now, just when you think the Cardano story couldn't get more complex, along comes the midnight network situation. Charles Hoskinson announced that over 250 million night tokens were claimed within the first 24 hours of the airdrop launch. On the surface, this looks bullish for the Cardano ecosystem. The Night token airdrop is giving 50% of the total supply to ADA holders, and the rapid claim rate suggests strong community engagement. But here's what has me scratching my head. If the Cardano community is this engaged with new ecosystem projects, why are we seeing such massive selling pressure from whales? Why is network activity declining if there's genuine excitement around new developments? This disconnect between ecosystem development and price action often signals one thing: the market is pricing in risks that aren't immediately obvious to retail investors. The technical issues with Ledger users during the airdrop claim process also highlight ongoing challenges with Cardano's infrastructure, challenges that sophisticated investors are clearly taking into account. Here's what I think is really happening and why the whale selling makes perfect sense when you connect all the dots. The mega whales, those holding over 100 million ADA, are actually accumulating from the mid-tier whales who are selling. This isn't bullish consolidation. This is wealth transfer from weaker hands to stronger hands at lower prices. The mega whales know that the current price levels aren't sustainable given the declining network activity and technical breakdown. So they're positioning themselves for a much lower entry point while simultaneously putting selling pressure on the market by absorbing supply from panicking mid-tier investors. This creates a cascading effect. As mid-tier whales sell, it drives prices lower, which forces more selling, which allows the mega whales to accumulate even more at better prices. It's a brilliant strategy if you have the capital and patience to execute it. Based on my technical analysis, everything is pointing toward a test of the $0.6884 support level that was last tested on Sunday. But here's the concerning part. The volume profile suggests this support might not hold. If we break below 68 cents, the next major support doesn't come until around 58 cents, 60 cents, which would represent a 20 to 25% decline from current levels. And given the whale selling pressure we're seeing, this scenario is becoming increasingly likely. Scenario 1. The bull case, 25% probability. ADA finds support at current levels around 70 cents, the whale selling exhausts itself, and we get a bounce back toward the 200-day EMA at $0.7417. Scenario 2. The base case, 50% probability. We continue the decline within the falling channel, test the $0.6884 support level over the next 2 weeks and potentially break lower if volume doesn't pick up. Scenario 3. The bear case, 25% probability. The selling pressure accelerates, we break below 68 cents with volume, and ADA enters a more serious correction phase targeting 58 cents, 60 cents. For those asking what I'm doing with my own ADA position, and yes, I do hold Cardano, here's my current strategy. I've already taken profits on 40% of my ADA holdings during the recent bounce to 75 cents. I'm holding my remaining position, but have set a stop loss at $0.685, just below the key support level. If we do get a breakdown below 68 cents, I'll be looking to re-enter in the 58 cents, 62 cents range, but only if I see signs of whale accumulation and volume returning to the network. I'm also keeping a close eye on the broader crypto market, because if Bitcoin starts showing weakness, all of these ADA scenarios accelerate to the downside. This isn't financial advice, but here's what the data is telling us. If you're holding ADA and sitting on profits, consider taking some off the table. The risk-reward ratio has shifted significantly bearish in the short term. If you're looking to buy ADA, wait for either a clear break above the falling channel with volume confirmation or a capitulation event below 68 cents where you can get shares at a significant discount. Most importantly, don't try to catch a falling knife. Let the technical patterns play out, let the whales finish their positioning, and then make your move when the probabilities are in your favor. The crypto market rewards patience and punishes emotion. Right now, the patient money is positioning for lower prices, and fighting that trend rarely ends well. What do you think about this Cardano analysis? Are you seeing the same warning signs I'm highlighting, or do you think I'm being too bearish? Drop your thoughts in the comments below. I read every single one and often respond personally. If this analysis helped you understand what's happening with ADA, smash that like button and subscribe for more deep dive crypto analysis. Hit the notification bell so you don't miss my next video where I'll be covering Bitcoin's next major move and why $100K might be closer than everyone thinks. Remember, in crypto, information is your most valuable asset. Stay informed, stay profitable, and I'll see you in the next one. Important crypto disclaimer. This video is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and risky. You should never invest more than you can afford to lose. I am not a licensed financial advisor, and this content does not constitute investment advice. Always do your own research and consult with qualified financial professionals before making investment decisions. Past performance does not guarantee future results. The cryptocurrency market can experience extreme volatility and significant losses. Please trade and invest responsibly.